Are you a new investor? Do you know the common mistakes new investors often make? Well, you're in the right place. Investing is a powerful way to grow your wealth, but it's also a field ripe with pitfalls. For those who are new to the world of investing, it's easy to stumble into common traps that can significantly impede your financial progress. Today we're going to delve into the top 5 mistakes that new investors often make. We'll be exploring everything from the lack of clear investment goals to the dangers of ignoring risk management, over-investing in one area, impatience, and the perils of blindly following the herd. Each of these can be a major hurdle to your investment success, but with the right knowledge and strategies, they can be easily avoided. So, buckle up as we navigate through these common missteps and learn how to avoid them. The first mistake is not having a clear investment goal. Imagine setting out on a journey with no destination in mind. You're likely to wander aimlessly, waste resources, and possibly never reach anywhere fulfilling. This is precisely what happens when you dive into investing without a clear goal. Having a clear investment goal is like having a compass. It directs your decisions, helping you choose suitable investment options. It also helps you assess the level of risk you're comfortable with and how long you're willing to stay invested. For instance, if your goal is to save for retirement in 30 years, you might opt for long-term equity investments. On the other hand, if you're saving for a down payment on a house in 5 years, you might prefer safer, short-term investments. A clear goal can also prevent you from taking unnecessary risks, such as putting all your money in a single, volatile investment. Remember, a clear goal is your roadmap to success. The second mistake is ignoring risk management. Imagine walking a tightrope without a safety net beneath you. That's what investing without risk management feels like. It's like betting your hard-earned money on a game of chance without any consideration for the potential pitfalls. Any seasoned investor will tell you that investing is not just about making profits, it's about managing risk. Yes, the allure of high returns can be enticing, but it's crucial to remember that higher rewards usually come with higher risks. If you overlook this, you might end up facing significant losses that could have been avoided. It's essential to diversify your investments and not put all your eggs in one basket. This way, if one investment doesn't perform well, others might compensate for it. The key is to balance the potential for growth with the amount of risk you're willing to take. So, always take into account the risk factor. The third mistake is over-investing in one area. This is the classic putting all your eggs in one basket scenario. It's tempting to go all in when you find an enticing investment opportunity. However, this can lead to significant financial loss if that particular sector or company takes a hit. Imagine if you were a farmer and you only grew apples. If a disease were to wipe out your apple crop, you'd be left with nothing. But if you diversify and grow a variety of crops, the loss of one wouldn't be so devastating. The same principle applies to investing. By spreading your investments across various sectors, companies, and types of assets, you can mitigate the risks associated with any one area. This strategy is called diversification. It allows you to potentially reap gains from different sources, which can help offset losses if one of your investments underperforms. Diversification is key to a balanced portfolio. The fourth mistake is being impatient. Now, let's talk about why patience is so crucial in investing. You see, the world of investment is not a sprint. It's more like a marathon. It takes time for your investments to mature and grow. Impatience can lead to hasty decisions, and hasty decisions can lead to losses. It's easy to panic when your investment doesn't seem to be going the way you planned. But remember, Rome wasn't built in a day. Your investment portfolio won't be either. Think of it as planting a seed. You don't expect to see a tree the next day, right? You have to water it, nurture it, and give it time to grow. Impatience can make you sell too soon or buy too late. It can make you miss out on good opportunities or jump into bad ones. So remember, slow and steady wins the race. Patience is indeed a virtue in investing. The fifth and most severe mistake is following the herd. It's a common pitfall many new investors tumble into. You see, the world of investing is not a one-size-fits-all scenario. What works for one person may not necessarily work for another. When you follow the crowd, you're essentially surrendering your financial decisions to the whims of others. And that's a risky game to play. Many a time, herd mentality in investing leads to inflated prices and bubbles that eventually burst, leaving the followers in a financial mess. It's the classic case of the blind leading the blind. It's important to remember that every investment should be based on thorough research, careful analysis, and your individual financial goals. Don't let the noise of the crowd drown out your own financial intuition. Instead, forge your own path, guided by your financial goals and the wisdom of trusted advisors. Be a leader, not a follower in your investment journey. So there you have it, the top 5 mistakes new investors often make. Let's circle back to them for a moment. It's essential to have clear investment goals to know where you're headed financially. Don't ignore risk management. It's not just about making profits, but also about protecting what you have. Remember, diversification is key. Don't put all your eggs in one basket. Patience, without a doubt, is a virtue. Investing is a long-term game, and overnight successes are rare. Lastly, don't follow the herd. Make informed decisions based on your research and understanding. Avoiding these common pitfalls can set you on the path to successful investing. It's not about being perfect, but about being persistent, learning from your mistakes, and continuously improving your strategy. We hope you found this video helpful. Don't forget to like, share, and subscribe to our channel for more investment tips and tricks. Happy investing!